Happy Monday, everyone. Welcome to TheStreet Live. I'm Jeff Mark, Senior Portfolio Analyst at Action Alerts Plus, standing live on the floor of the New York Stock Exchange with Jim Cramer. Jim, we got markets higher today. Yes. We're seeing, you called out on Twitter, it's a good day when we see the Hong Kong market up, China, oil up. What are you looking at specifically today?
I think that sometimes this market's not that smart. I don't think anyone doubted the idea that Pfizer was going to be able to get approval. But as you look at the CDC and the FDA, they've been so fickle. Maybe there are people who are genuinely surprised. I know that only 3 weeks ago the FDA was saying maybe we'll approve it in September. I think Biden pushed it, but travel and leisure's roaring. Oil's roaring, but oil bounced at 60 as we said it would. And I think that big tech, my God, we have some great stocks in Action Alert. Just some fabulous stocks. And big tech's on fire, and I just think that when big tech's on fire, many things work.
Yeah, and those companies, they do have the best business models. They are the secular long-term winners. But I do want to touch back into Pfizer for a minute. You did call out the FDA just approved the vaccine. Right. Great news that many had saw coming. But they also announced an acquisition too, and you've long been saying that they need to put that vaccine money to work because they do have a patent cliff. So they buy this company called Trillium Therapeutics. What do you think of the deal?
Well, Trillium they're close with that investment, but Trillium's got a number of different cancer indications, and they're at the beginning now of many of the trials, and a lot of leukemia, ovarian. This is not something we've seen this with GlaxoSmithKline. What matters to me is that if you are looking for speculation, look for oncological, because this stock had been down, and suddenly 6 goes to 18. And I think that Pfizer is on the prowl because Pfizer has to build through a period of expirations. But so many other companies are on the prowl. So I've been saying, look, anytime anyone calls me the lightning round and says I'm thinking about buying an oncological, I always say, as long as you recognize it's spec. But I know that I'm going to redouble my efforts to find more because this was a written-off company. And Pfizer's spending a lot of money to buy it. Huge, more than $2 billion. And I think that means don't give up the ship on any oncology stock if they have trials.
What would you say? So we were in Seattle Genetics, CGen, last year. We got in last year. I think we sold at the beginning of this year around 190, 200. That's where a lot of our sales are. I know Merck has that investment there. Is that sort of too big of a play or of a spec?
No, I think Merck needs something. Merck has probably been one of the worst performers. Even Bristol's doing better than Merck. Bristol does have a connection with this the Alzheimer drug that's with this this Prothena, but it's obviously not as good as Lilly in terms of just being direct. But I think that Seattle CGen, we have to go back and open the books on it because I do believe that Merck must do something. Merck can't just stand there and have their stock be at 79 and not expect some maybe activist pressure. Who knows? I mean, if they look at AbbVie, I was thinking there was going to be pressure on AbbVie, so Action Alert name. They've done so many good things. That stock is roaring. So I feel that Merck has to do something.
Yeah, and we did see Cowen, they increased their AbbVie price target to 130 this morning. We'll talk more about that on the Action Alerts Plus video right after this. But Jim, I do want to turn our attention back to the markets. We're seeing a lot of these beaten down travel and leisure names bounce today. Maybe it's because of that FDA approval of the vaccine. But on Real Money last Friday, you called out how this market can change very quickly. Even in 10 minutes, at one point it's tech and semiconductors leading, and next it's retail or the drug stocks like AbbVie, as you mentioned. So from an investor standpoint, how do you recommend investors stay so nimble in a market that wants to change so quickly?
Well, look, when you look at healthcare fell so out of favor that you suddenly had to say, listen, I want to own a healthcare. Right now, the Cloroxes of the world fell out of favor. We got to own one of those. I think the way to approach it is to actually do something I would typically not recommend. Every dip, there's one that you should buy. Now, we talk a lot, even this weekend, about, well, how many stocks can we really own? But this is an opening trade today, and if you didn't have an opening trade, like we were telling people to buy Disney last week, if you don't have an opening trade, well, you missed it. You just missed it. And healthcare, now you missed it. So always look, this week, the ones that are down are the commodity plays. So I don't think they'll stay, look, if you bought oil last week, you still buy oil. You can still buy Chevron. So I think you build it, I guess ultimately what you get is a portfolio that has pretty much everything, but it's when you buy them. and I think you have to buy them when they're trashed. Home Depot was trashed last week. How long will that stay trashed? I don't know. So I'm saying that you buy the dips tend to be group related, and when you get a chance to buy one of the dips, pick the one, pick the group that has really been that's been really beat up. Now, I know that sounds like much more of a trader mentality, but you and I both know if you can buy Wynn today, I think Wynn's going to work. But I think that what's most important is that you buy a company like a Disney, betting on a reopening trade, and it works. So keep in mind that what's been happening is the obvious is working. The obvious. We knew that Pfizer was going to get approval, and yet the stocks that would benefit from Pfizer approval all went up today. So I just say be aware and stay away from China no matter what.
Yeah, and I think your point about what gets beaten down and then rallies back, that speaks to the rotational action that we've really been seeing all throughout the year. Jim, now I do want to turn our attention back to Bitcoin. So it did cross 50,000 today. It's the highest it's been since around mid-May. And we also got some news that PayPal is extending some of its cryptocurrency services to the UK. This is the first time they're doing this outside the United States. So very big news for PayPal. We know how much cryptocurrency can be a driver of engagement and activity. So what do you think about the PayPal news? What do you think about Bitcoin at these levels in general?
I think that Robinhood they've moved from stocks to options to crypto. I think that crypto trades very thinly. It's over the weekend it goes up a lot. That's always a very strange thing. And then sellers come in. But there has been a resurgence of the use of Bitcoin in common parlance. So, I mean, the number of people, if you go look over the Coinbase conference call, tells you exactly how much this thing has become, what percentage of people use it or own it, and it's staggering. I mean, you're talking about like 20% of the people are into one of these a crypto. So I think I'm not going to be like Pomp and say it's going to go to 100,000, but it did bounce convincingly off a bottom. It does feel good, but it's very chart-oriented. I can't say that Bitcoin suddenly, I'm seeing it used by a lot of people. I am seeing it adopted by like the PayPal instance. I continue to think the PayPal, well, there's a good example. FinTech is very out of favor. Okay, right now it's just very out of favor. So what do? You buy PayPal. Because then FinTech comes back in favor. I had Pfizer on this week. They're doing fabulously. Square's coming back. I think that you have to have a recommended list of things that drop. And PayPal does crypto and it moves it. It's kind of whatever you do, that you issue a release, it works.
Yeah, and we've been building a position recently at Action Alerts Plus in a new fintech name. We'll talk about that this Wednesday on our Action Alerts Plus monthly call that's scheduled at 11:30.
Right, and we will touch every stock. We will have 15 questions. We will touch every stock that's in the portfolio. I'll give you a sense about what I'm looking for in terms of trying to find companies that are changing their stripes and refreshing themselves and why that matters, and the ones that don't refresh tend to go down. So we're looking for companies. I'll be a little intro about that, and then we'll go over each one, and I think you'll find that hopefully it'll be as enlightening as people last one had the most people ever. But I'm hell-bent on trying to cover every single stock because we have a very good portfolio.
Yep. And let's go back to a company that was one of the first big-name companies to put Bitcoin on their balance sheet, Tesla. Last week they had that big AI day, artificial intelligence, and they took out some plans for like this humanoid robot. Did you see that?
Yeah,
the dancing.
I did, but I also saw the actual pickup truck. Go buy an F-150. I mean, this thing is not just ugly. It is. I mean, you gotta love Tesla to get in this thing.
Yeah.
It is.
Is this more about Elon Musk, the showman that we talked about last week?
Well, we got two showmen going. We got Elon Musk and we got Pat Gelsinger. Pat writing an op-ed today. I mean, Pat's everywhere, and Elon is not as everywhere as we'd like, but these are guys who know what to tell a good story. I still like Tesla because I think that when you look at what happened with GM, every single Bolt has to be recalled. I still like Tesla because I think it's been unfair the way that their autonomous driving has been handled because there's many more accidents from drunk drivers. But I recognize that I think that this pickup truck is going to be a disaster. His first disaster. I mean, it's just, and I saw one. I mean, It's
Aesthetically not as clean as that F-150 Lightning.
no, I mean it's an eyesore. I mean, I think that, I think if you're driving and you see one, you're going to take your eye off the front because it's so ugly. It's just an ugly thing.
Yeah, well, you mentioned GM earlier and their recall of the Bolt. So it's extended out, and really, Jim, you know, a lot of people like to look at GM, Ford. These stocks are both down around 20% from their highs earlier this year. Do you think what's going on with GM right now and the Chevy Bolt, does that extend out to some of the other EV plays, or is it more specific to the company?
About Ford and our very good piece about what we do with our action alerts, but no, they're not the same. And a lot of that is because did you have chips coming from Malaysia or did you have chips coming from Taiwan Semi? There was a hit of COVID in Malaysia, which is GM, very much GM, that is just shocking people. Now I know that China, they apparently said, listen, we've contained it, and that's positive for everybody. But Ford was much more Taiwan Semi, and Taiwan Semi did not have a problem. So beware that if you take them both down at the same time, that's just foolhardy.
All right, Jim. And we got a big week this week in terms of Jackson Hole, the Fed meeting. You were on Real Money this morning. You're saying that Jay Powell the Fed, they're going to be right about transitory inflation. You called out how some commodity prices have fallen. Maybe we see some wage pressure ease as more people join the labor force. So how should investors prepare, or is it?
Of course. I mean, look, Toll Brothers reports on Wednesday. If Toll goes down, buy it. I think that the home builders have had enough of the Whirlpools charging them anything and the glass companies charging them anything, the wood companies. I think that they can actually build fewer homes and let those commodity prices fall. I also think, by the way, that the commodity prices that go into a car are going to fall because the chip shortage makes it so they can't make as many cars. So I think commodities are going to be under serious pressure. Now, I know that oil bounced, but remember, oil was at 70, going to 75, right? Copper fell, iron collapsed in the last week. Now, plastics, what goes into plastics are going down. So I think that the inflation that people talk about, which is that the endless wage inflation, endless commodity inflation, is not playing out. And I know that Lyft, which I have on tonight on Mad Money, is saying, look, once the unemployment benefits expire, the drivers flock to them for additional, they want more hours. They need more hours because their job doesn't pay them enough. And I also think that one of the things that's forgotten by these inflationistas is the productivity gains from like a ServiceNow. If you go over the Deere quarter, which I almost feel like nobody did, it was brilliant. It was mostly about autonomous driving of tractors. And that's what you need because, frankly, that guy costs a lot of money. That guy or gal costs a lot of money who's in the tractor. And we're seeing this over and over again, Domino's Pizza. We are able to make it so that the productivity is squeezing out people. And those people are going to find jobs somewhere. So if you have a surfeit of labor, then the inflationists are going to be dead wrong. And I think you're going to be very wrong.
Yeah, and just thinking about productivity, we do have Salesforce. They report this week, and it'll be the first quarter, really their first time talking since they closed that Slack deal. So it'll be interesting what they have to say on that front.
I wonder how much they talk about Microsoft versus Salesforce, Tableau versus Amazon.
Right.
They're partners with Amazon, but just pretty good. I think that Tableau versus Microsoft Analytics.
And
Slack.
Microsoft increasing prices, by the way, on the 365.
Yeah, I mean, it's small enough that I think the IT guys may just waive it 10 years. That's one of the increase, and that's why Microsoft stock has been on fire. But, I think it's the Empire Strikes Back when it comes to Salesforce.
All right, well, we'll definitely look forward to that earnings report later this week. That's the show, everyone, for today. I'm Jeff Marks. We'll see you tomorrow.